My opportunity 2 was on FASB Statement 117. It is on the financial statements of not-for-profit organizations, and it was issued June of 1993. So I'm first going to talk about what FASB Statement 117 is about and what it requires. So it really requires four main things. First, the statement of financial position, which requires that the not-for-profit shows total assets, liabilities, and net assets. Secondly, the change in the not-for-profit's net assets should be reported in a statement of activities. Thirdly, the change in cash and cash equivalents be shown in the statement of cash flows. And lastly, not-for-profits must classify their net assets as either temporarily restricted, permanently restricted, or unrestricted based on donor-based restrictions. So since the implementation of FASB 117 back in 1993, there have been wishes by people, specifically stakeholders who use accounting information, who want to see more transparency in the accounting statements for not-for-profits. According to the Journal of Accountancy, FASB is making some changes for how not-for-profits disclose their financial information. The three main changes involve the classification of assets, financial liquidity, and the allocation of expenses. We will look at these three changes and how they will impact a specific not-for-profit. So first, the classification of assets will change from unrestricted, permanently restricted, and temporarily restricted to simply net assets with donor-imposed restrictions and net assets without donor-imposed restrictions. The purpose of this is to provide simplicity and transparency for both external and internal users, and to make the balance sheet more understandable and easier to use. Secondly, the not-for-profit will be required to show at the end of the year all the current assets they have that can be readily turned into cash and to meet immediate cash demands. The reason for this is that just because the not-for-profit has a healthy asset line, these assets could mainly be in buildings or long-term assets that cannot be easily converted to cash. And on the flip side, the current assets and cash still need to be disclosed as to how much of that can be readily spent, as some donor-imposed restrictions prevent the spending of that cash. So the more liquid the not-for-profit is, the healthier it is, which is what our stakeholders want to know. Lastly, the not-for-profit will be required to record expenses by both function and by nature, and the expenses need to have an explanation of the methodology of their allocation. And the purpose is to promote financial health and transparency. I want to briefly touch on the difference between recorded expense by function and by nature. So here is an example of a for-profit income statement where the expenses are shown by function. This means the expenses are shown as their functions, such as operating expenses, selling expenses, and administrative expenses. The other method is recording the expenses by nature. And this statement gives an example of that using the nature of the expenses. Some examples are the differences between beginning and ending inventory, rent expense, supplies expense, and so on. And here is a very simplified version of a statement of functional expenses for a not-for-profit. Notice that the expenses by function include programs and management in general and fundraising. The expenses by nature on the left include expenses such as printing, supplies, rent, and depreciation. So these are some of the large changes that the not-for-profit organization will need to make in order to stay up to date.